I can snack on. That's not the first time I burned my breakfast while I was trading. So, and then eventually, what we're going to do, by the way, is we will start calling live trades every day. You know, as many as we see. All right, using what we learned already. All right. So this way we can all try to make some money as we're learning, which is the ideal combination. Um, Now, let me just start by saying today that this room is being hosted by the Premier Trading Academy. And I hear someone
Good morning,
trying to
everybody.
speak there. Hey, Gene.
Hey, good
Gene?
morning.
Okay, I hear that bird in the
Yes, sir.
background, so I know it's you. All
Oh, I
right, good.
know. Let me try to move him. Hold on.
Gene, I was going to tell Gene to buy a cat. I know that that bird is loud. It's a beautiful sound, but um, it's loud. Now, John, you wanted me to go over the sniper. Um,
Okay, can you hear me now?
yeah.
Okay, good. Good morning, everybody.
Yeah, I suggested you get a cat, Gene. That might solve the bird problem.
Yeah, no, you're not kidding.
Okay. Now I'm going to recap everything we did over the last couple of days and bring everybody up to speed. The recap will be shorter than what we did the last couple of days because I'd like to move on a little bit. All right.
Sounds good.
Um, and as I mentioned, Premier Trading Academy is hosting the room, and a bit later when I get off this screen, I'll drop some links in, and the trading division of the Premier Trading Academy is Prime Trade FX. All right. Prime
Okay.
Trade FX is not open to U.S. clients directly. All right. But you can, if you're not a U.S. client, you can get to 200 to 1, 500 to 1. You can, scalp. There's no dealing desk, which is beautiful. Um, no FIFO rule, and you can hedge. For U.S. clients, through the school, there is an opportunity to take advantage of this, but through the school, you can't go directly to Prime Trade FX and open an account. But if any, if you send me a private message or something like that, if you're an American client and you want to take advantage of that, I'll touch base with you in that respect. And I'm trying to do some housekeeping here in the beginning. For the purpose of homework, the purpose of homework assignments, that's where you will send any homework assignments, when I give them out. Okay? Normally, I try to give control of the mouse to different people in the room. So if I'm talking about a topic, I want to make sure that you understand the topic, and that's the best way to do it. But that aspect of this room is a bit buggy, so I'm not going to do that at the moment. So if you have questions or if you want to send a screenshot, that would be the place to send it. Okay. Um,
Okay.
and I just want to make sure I have that right. Um, all right. Any questions on any of that? I do have to kind of, read well, I don't have it in front of me, but just a general disclaimer. Anything that we talk about in this room is for entertainment purposes. Trading Forex or any market is risky and you can lose some or all of your money. Never trade with money that you can't afford to lose. So that disclaimer is out of the way. And, we'll get started. Now, I just want to ask one more time, does anyone have a specific thing that they'd like to touch on today uh,
No.
that we covered over the last couple of days? Okay, Matt is saying support and resistance. We didn't cover that the last couple of days, Matt. That'll be next week. And Matt is JK. I don't know what that is, Matt. And I'm just waiting for people to type. So sometimes if I go quiet, I see that people are typing, and I want to try to address everybody's questions and concerns. Is it being recorded? I believe it is. Okay, and I will have a link Monday where the recordings will be hosted. All right. So if anyone did miss something, they'll be able to pick up on it then. Down the road at some point, there'll be a monthly charge for the room. We're not sure about pricing and all that at the moment. But for now, enjoy it and grab as much as you can from it. And I see John typing, and I need to open up one of these Word docs here. The add-ons for Sniper Trader, are you going to talk about that today? If time allows, yeah, I will. And they're not add-ons; they're just some other ways you can look at the market. The nice thing about the Sniper trade is that once you have your line in the sand, and I hope you remember what that is, John. And for those that weren't here yesterday, I'll go over that again. Once you have your line in the sand, you can use your favorite setup to get into the trade. Do you follow me? So that's the beauty of this. I'm not asking you to change anything in your normal trading routine, but I am trying to help you find a better place to trade. All right? So I'm going to start briefly with an overview of what price action is. And in our discussion yesterday, I just want to see if I have this document here. I need to open up another page. Basically, price action is the natural movement of the market made up of consistent and repeatable patterns. All right? Wrong thing. Just let me get my bearings here. So price action is the natural movement of the market made up of consistent, repeatable patterns. Now, yesterday we talked about what I call the four building blocks of price action. There's only four things that price can do, and that's to move. Why is this not opening? Oh, there it is. Okay. All right. Price action is a natural movement of the market made up of consistent, repeatable patterns. This is my definition of price action. Okay. Now, price action is made up of four building blocks, and this is my concept that price action is made up of four building blocks. The building blocks are the uptrend, the downtrend, the sideways or consolidating market, and an immediate or instant reversal. All charts are comprised of these four components, but they don't always follow each other in the same order, which is why markets seem to move in a random fashion. So what that means is that these are the four things that are going to happen on a chart: an uptrend, a downtrend, sideways, or immediate reversal. We don't know which one of these four is going to line up after the next one, but I know it's going to be one of the four. So you may get an uptrend and then consolidation, then another uptrend and more consolidation, or you can get an uptrend and an immediate downtrend, or you can get an immediate reversal and then it can go sideways, or you can get an immediate reversal and it'll go downtrend followed by a sideways market. So it's those same four building blocks, like Legos, they'll be put together to create price action on the chart. Okay? Inside these building blocks are made up of candles. And they're made up of long candles, short candles, indecision candles, and breakout candles. All right? So I'm going to go back to the chart, and we're going to go over this, relatively quickly so we can move on a bit. I'm going to talk about the four pieces of price action. This is a new broker. I'm using the prime trade setup, so I need to do a little housekeeping here also. Get rid of that ray and make this line a little bit heavier. Okay. So here we have the uptrend, and as you can see, we have higher moving prices. Here we have the downtrend. Okay. Here, oh, I have to clean this up also. Customize. I just want to add my rectangle tool. Insert. Okay. Here we have consolidation, where the market basically goes sideways. Here we have consolidation, where the market is basically sideways. And then that's, we have another downtrend, and we have another uptrend. And then here we have an instant reversal. And what this is, the market went up, and then on one candle, everyone decided to go the other way instantly. They didn't even go sideways for 2 or 3 candles. They said, we're out of here, we're done, it's over. That's an instant reversal, okay? And that instant reversal led to a downtrend, and that downtrend was followed by the other building block, which is consolidation. We broke out of consolidation, and then that was followed by another downtrend. I need to turn one of these brokers off because I'm getting those alerts. All right. Is everybody with me so far on the uptrend, the downtrend, the sideways market, and the instant reversal? Just give me a yes or no. Just so I know where we are here. Okay, great. Now, what we then did was we took the uptrend and the downtrend and we broke it into pieces. So now that we know we're in an uptrend, what is the uptrend made up of? If I had to build an uptrend, what would I need? All right. And I'll take, let me go back the other way. Youssef, Abu Youssef, can you please give me a pair? Any pair that you want to look at. Abu Youssef. And I hope I'm pronouncing it correctly. Okay, euro dollar. And Helen, if you're here, can you give me a time frame? Oh, we are on euro dollar already. Okay. Helen, if you could give me a time frame. Okay, 1 hour. So we are on the euro dollar 1 hour chart. All right. So let's just find a rather traditional uptrend or downtrend. There's a lot of good ones here. We'll take this one. If I had to build a downtrend, what kind of candles do I need to build a downtrend? Okay. The first thing is I need candles that close lower than where they opened. Let me open this up a little bit. All right. So in order to build a downtrend, I need candles that are going to close lower than where they opened. So I need down candles or short candles or bearish candles. So imagine if I had a box full of different candles, just the candles, and I had to build a downtrend. I know I need candles that are going short. So these are short candles, these are short candles, these are short candles. All right. Now, in any trend, you have your move in the direction of the trend, which you could call your thrust move or your drive move. And then you have your pullback. So this would be my move in the direction of the trend. Okay. And then, as all trends do, there's a bit of a pullback. And then there's another move in the direction of the trend. And then there's another pullback. And then there's a move in the direction of the trend, and then another pullback. And then a move in the direction of the trend, and then another pullback. Okay? So these moves in the direction of the trend, they can be called drive moves, they can be called continuation moves, they can be called impulse moves. There are a lot of names for them. What's important is that you just understand what it is. It's a move in the direction of the general trend. Okay? The next part of a trend, now as we make the move in the direction of the trend, price will pull back and then it takes off again and it leaves a marker. And that marker is the old high. So here we have this old high, price pulled down. It made the second part of a trend, which is the pullback. All right. And then it left a marker, which is the high of the pullback. Okay. I'll just get this out of the way. Price went down again, pulled back, and then came back in the direction of the trend, but not before it left the marker, which was the old high. Okay, and then price pulled down again, pulled back, and it left a marker, which is, again, the old high. So when you're in a downtrend, you get a series of lower highs. Okay, this high price is lower than the prior high price. All right? And that's indicative of every downtrend does that. If you don't see that, you don't have a downtrend. So the downtrend consists of lower highs all the way down. And the downtrend also consists of lower lows. All right, so here is a low right here. Let me get this out of the way. Here's a low. All right, then this one. And let me get some of these lines off the chart. Okay, now this one happens to be a bit of an aberration, so I'm not going to count this wick for the moment. But I could count the closes because nothing closed below here. And I'll just point that out. You'll notice that nothing closed below this level and until we got here. So I could call this a low, and then this is a lower low, and this is a lower low. So in the downtrend, you're going to have lower lows and lower highs. It's really important to remember that that's part of the downtrend. That will come back later in terms of money management and trade positioning. So we have we have lower highs in a downtrend, lower lows in a downtrend. All right. So we know a downtrend consists of the thrust down or the drive move or the continuation move or the impulse move. We also know that after that impulse, drive, or thrust move, we have a pullback. Price goes down and then it pulls back. Okay? So the next thing I need in order to build a downtrend, I know I need down candles. The next thing I need are pullback candles. Because in order to have a downtrend, I have to have the pullback. All right? Now, in my definition, a pullback candle, I hear somebody moving around with their microphone. Okay. My definition of a pullback candle is a candle where the low of the candle, and let me open this up a little bit more. A pullback candle is a candle where the low of the candle, this low, is higher than the prior candle's low. All right? In a downtrend, a pullback occurs, or the first warning of a pullback is when we have a candle that makes a higher low than the prior candle. Okay, those are called pullback candles. So if I had a box of candles and I had to reach in there to grab something, and I needed to make a pullback, I would say, give me pullback candles. You got me? Because we're building a downtrend, and we're breaking the downtrend down into DNA, into its smallest components. So a pullback candle would be a candle that makes a higher low than the prior candle's low. That's a tip-off to me that price may take a break or a breather. Now, these pullbacks are caused by profit taking. They're caused by other major players coming into the market, or another major player trying to dump a large to do it in pieces. You know, there are a lot of reasons